Hello, I'm Sean Richards of Not a Yes Man's Economics. First, let me hope that you had a happy Thanksgiving weekend for those that have been celebrating that. I want to continue with that theme, looking at the US and in particular house prices. And there are really three ways of looking at this in the modern era. Old-fashioned is simple, those that already own a house, against those looking to buy. In the modern era, though, the establishment stepped in because what they think, this is their idea, that you get wealth effects out of this. If you look at, say, the Federal Reserve, the speech this week from Jerome Powell, who's its chair, he mentions wealth effects, saying that middle-income US families have now moved ahead after the credit crunch, and maybe even those at the lower income are catching up. The President, Donald Trump, refers to this quite a bit, not quite in that format. This week he's given us several goes at celebrating higher share prices. And it's a very short trip from that to house prices and wealth effects. If we look underneath all this at the actual numbers though, house price growth in the United States has slowed quite a bit. It peaked at around 7% in the sort of early part of last year. Now it's just over 3%, 3.2%, according to CoreLogic. Now, one can look at this in several aspects. I'm someone who thinks the slowings are good news. It brings it roughly into line with US wage growth, for example, so house prices are not running away from that. However, central bank will be quite worried by that. Probably President Trump too, although, as I said, he's busy with the stock market usually. If we try and look ahead and figure through what the impacts on this will be, we'll see that there have been some favourable trends. For example, bond yields have been falling, interest rates have been cut, so mortgage rates have fallen in the United States. You'd have expected that to be supporting house prices. If we look at the economy, then there's several pulls here. Staying with the positive, employment growth has in general remained good. There's been wage growth, so again, supporting. But then we start to get catches because wage growth, as I said earlier, is just about keeping pace with house prices. So that's not really pushing it. And then if we go deeper to the underlying economy, then economic growth has slowed in 2019. We're nowhere near the Donald Trump target or ambition, whatever you want to call it, of 4% a year. But we've dipped away from 3% to 2%. And the fourth quarter for the data we've had so far looks quite weak. The New York Fed has it at less than 1%, so the most running what we call nowcasts. So we've seen a slowing of the economy. So it seems like house price growth is going to remain low for a little bit. Of course, various bits we don't know, what will happen with the trade wars and things like that. But the economic position has been slowish, shall we say, and indeed slowing. This has several impacts. One is, whilst there have been gains for people that own houses, a thing that bothers me a lot is that those that are trying to buy, first-time buyers or those that need a bigger property, expanding family, that sort of thing, things have run away, got more expensive. Some would have welcomed the drops into 2012, when you can see from peak to trough, a fall of over 50%. But now we're back above the previous levels. And this comes into another factor. And I was mentioning earlier about trying to compare things with inflation. You see, this also depends on how you measure inflation as well. If we look at the situation, there's so much pressure from central banks and establishments to put rents into the inflation measure, as opposed to, say, house prices. That's really rather awkward for people that own their own house, because obviously they don't pay any rent. They own it. They pay a mortgage, so you might think there's some logic for that going in. And you might think around house prices as well, logic for them going in. If you take a look at the chart in the background, now it's a little out of date, but it establishes the principle, you can see why they're not in there. That's because house price growth, in many phases, is quite a bit higher than rents. That's why they want rents in the inflation measure. That's really awkward, because I think that's a misrepresentation. So there you have it. Not much house price growth, but frankly, I think that's a good thing. Thank you.